Hi everyone. So it was a Black Monday, we can call it. The mid caps and the small caps both equally cracked 4% today. Individual stocks were down 6, 7, 8% as well. And the most of the pain was in the realty sector, which kind of cracked 6.5%, right? So 6.5% kind of a crack in a one single day is usually not just the retail selling, it can be the mutual funds also, or let's say the big investors kind of getting out, right? Because usually 6.5% is really rare for a one day crack by retail selling, right? So looks like there is some pain in the realty sector which is cracking big time, and maybe that is spilling over to the stock market also. Because if you heard my Friday's video, right, there is huge leverage position in the stock market. Usually, whoever plays the real estate market generally tends to play the stock market also. Maybe if there is a crack happening in the real estate market, that is spilling over. Maybe people are pulling funds out of the market to kind of support the real estate. We don't know what exactly it is, or the news that is kind of spooking these investors. But if you look at the data, so in November itself, the margin traded fund or the leverage fund was close to 85, 86,000 crores. And probably in December, that would have gone easily past the 1 lakh crore mark, right? And from some other sources, even got to know that the from the banks, people had taken personal loans worth more than a lakh crore to kind of invest in the market, because the market was such an easy market which was just going up, and 18% return was like nothing, right? People were making 40, 50% return, so they kind of took that loan. Looks like all that is getting unwound, because from the data, the accumulation has remained decent. It's not like the big guys have distributed much. On the contrary, the mutual funds are going out there and buying. Still, the indices are cracking big time, and these cracks are majorly on relatively smaller volumes, which kind of suggests this is nothing but retail panicking and getting out at whatever price they are getting right now. Right, the same money which kind of held the Nifty higher, or let's say absorbed all the FII selling and pushed the indices higher in, let's say, 2022, 23, 24. Now the same money is kind of selling on the downside and getting out at whatever they can get, right? Because see, if you look at the indices also, it has been a good 6, 7 month period wherein we have just gone sideways, 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 and then we have started to crack. So what would have happened? Whatever leverage positions you have built, right, on that you are paying interest. And since the stocks aren't really moving, what is happening is you're paying that interest as well as the stocks are going down. So they might as well just exit, book loss or book profit, whatever it is, and get out of the market. That is what we are seeing right now happening in the market. And no one knows where this panic is going to stop. People thought it might stop today, but today we ended at the lows of the day. Chances are tomorrow there might be a spillover. In the first half, we might open lower, or let's say open at break even and then go a little lower. Maybe second half might be a recovery, we don't know. So we'll look at the accumulation data and the momentum charts, what they are telling for today, and then analyze what we can expect in the coming days. For the large caps, accumulation has been very good. So if you look at 13th, right, that is today, there is pretty decent buying that has happened in the Nifty 100, that is the large cap stocks, right? If you look at the momentum has reached to a level from where previously it has rebounded. So maybe some kind of a support might come in, because if you look at the Nifty isn't cracking much like how the small and the mid caps are cracking. That is because FIIs and DIs are not really selling the large caps, right? There is no much pain there, right? So this is more to do with the retail investors who are getting out. So if you look at the mid caps, it has been the highest accumulation in the last 4 months, right? So if you look at these spikes, right, 13th of Jan is the best one among the last 4 months. And if I go back even 6, 8 months, this has been the best. That means the mutual fund, or let's say the big investors, had kind of poured in more money today when there was so much panic in the market. If you look at the momentum, like if you look at since August of last year, it is the lowest that we have touched. That kind of explains how much panic there is, and everything is cracking. It's not like you have some safe pockets. Everything is cracking big time. because like I explained in the Friday's video, once you start unwinding in one sector, that kind of has a ripple effect and you start selling everything that is there in the portfolio, right, to cover up for the losses made in that particular one. Now coming to the small cap accumulation, here as well, the highest ever for the last 4 months, 8 months, and looks very strong. So in today's panic, the big fellows, that is, let's say the mutual funds, PMS, and all those guys have gotten in and bought today, and which is a good thing, right? And now coming to the small cap momentum, again, this is the lowest that we have touched in the last 8 to 10 months. So chances are from these oversold territories, we might bounce in the coming days, but what will confirm that? A reversal candle on a daily chart. Okay, if you look at the small cap 100, mid cap 100, or you take the Nifty 500, Nifty, a reversal candle is a must. After that, we would be comfortable that there is a bounce that is happening. Until that happens, we don't know when this mad panic will end, right? It can drag us lower even for the next 2 days also, because like I told, if one starts to panic, the other might be brave enough. The next day when he starts seeing his portfolio again crack 5-10%, he might throw in the towel. So it becomes a snowball effect and people start exiting one by one, and eventually the bravest generally tends to exit at the last, after which the market starts rallying again, because when everyone has kind of sold into it, is usually the big guys who would have bought everything, and then they start pushing it higher. So as of now, still a wait and watch. Probably tomorrow we might reverse. I'm not trying to predict when we are going to reverse. Once we get a confirmation from the price, a reversal candle, that is when we are going to go out there and again start taking trades where the accumulation was very good, the big guys are pouring in more money. Those kind of stocks we are going to go and buy. Hope this helps.